Hi there, this is the thing about PayPal. Right now the market cap is about $71 billion, right? And the price $73 per share. Now, to value this company, so you can make a good investment, you have to look at what they have and what they can deliver. So keep in mind this number, $71 billion. Cash plus investments, PayPal has around $15.8 billion. Quite nice, quite a lot. But don't forget their debt, which is about $11.4 billion. So the net cash position about $4.4 billion. Good enough to do some buybacks, especially at these prices. They will get a good return. Now, as you can see, the value doesn't lie on their balance sheet, but on the revenue and free cash flow, what they can deliver, the return. So right now, the return is around, less than 10% from their free cash flow yield. If you look at the revenue over the last 3 years, plus estimates for 2025 here, you can see that in 2022 they delivered $27 billion in revenue. 2023, $29 billion. 2024, $31.8 billion. And for 2025, the market expects the revenue to increase by 4% here, deliver around $33 billion in revenue. So as you can see, the growth rate was about 8% from 2022 to 23. From 23 to 24, around 6.8%. And then for 2025, 4%. So as you can see, the trend for the growth rate is slowing down. Be aware of this. Then you also look at the free cash flow, because this is the most important indicator for investors, because this is the money that we'll get via dividends. Of course, they don't pay any dividends, but via buybacks, share repurchases. 2022, $5 billion free cash flow, quite nice. 2023, $4.2 billion. 2024, $6.7 billion. And for 2025, another, between $6 and $7 billion they expect. So close to the current market cap of $71 billion. Now, to value this company, to see whether the free cash flow will increase or decrease, you have to look at their indicators, the most important indicators. And those are the total payment volume here and the total take rate, the fee they charge on this total payment volume. As you can see, total payment volume over the years, over the last 3 years plus estimates, has continued to increase quite nice. A growth rate over 10%, from $1.3 trillion to $1.5 trillion, then to $1.6 trillion, and then to $1.8 trillion. So growth rate of 12%, 22 to 23, 23 to 24, 10%, and from 24 to 25, growth rate of about 10%. And this is nice. This is nice because based on this total payment volume, they earn this revenue. Of course, based on their total take rate. And here is the thing, the most important thing you have to understand about PayPal is the total take rate. Here, TTR. And here is a problem, especially if they continue this way. Total take rate 2022 was about 2%. Then 2023, 1.95%. 2024, 1.89%. 2025, the estimates, 1.79%. So as you can see, the trend for the total take rate is going down. Keeps going down, this rate. 2022 to 2023, a decrease of 3.5%. 2023 to 2024, a decrease of 3.1%. And for 2025, it is expected a decrease of about 5.3%. And this is bad because you have to understand this. As long as total take rate declines less than the total payment volume, that's a good thing because you get a positive return, a positive increase in their revenue. But now, if these total take rates continue to decline by 5% or 10%, that will be bad because, let's say for 2026 here, 2026, total payment volume might grow by 6%. And the total take rate decreases by 6%. In that case, you no longer have any growth in their revenue. It will be zero. So the revenue will be flat. And if that happens, you'll be left with only the current free cash flow of about 6.7 billion. So it will not increase. It won't go higher. Now, if total payment volume increases by 16% and you only have a decrease in the total take rate of about 6%, then you are left with an increase in their revenue of about 10%. And then, if the revenue grows by 10%, also the free cash flow will increase by 10%. And this is the most important indicator. If you understand total payment volume and the total take rates, it's easy to value and see the future of this business. Of course, not that easy, because you have to predict the total payment volume. What's next? Now, there is another indicator, active accounts, which are about 446 million for the moment, but I wouldn't rely too much on this number, because it might be misleading. What's important, yes, to see an increase in this number of active accounts. It doesn't matter how much, but to be stable. But what's important is the total payment volume to increase more in the future. The higher the growth rate, the better for you. And the total take rate to have just a small decrease. Be lower than the total payment volume. As long as it's lower than the total payment volume, revenue will increase and so the free cash flow. So right now, based on the free cash flow about 6.7 billion, you also can add the net cash. Yes, the business may be fairly valid, depending on the return you want. If you want 10% or around that level, between 7 and 10%, if you are pleased with this return. If you want a higher return, let's say 15% or more than 20% to have a double, then you have to wait. You have to wait for a decline in the stock price, because you won't get a double, to have a 2x in the next 2 years. This is my goal. This is my aim. I only invest in companies where I can have a double in the next 2 or 3 years. Something like that. Sometimes it happens, or it will take 5 years. It depends. But this is the goal. A double between 2 and 5 years. And if you succeed this performance, your return is higher than 15% a year. So this is my aim. And by the way, if you want access to investment like this, you can join my portfolio. See exactly what I buy and what I sell. And recently I bought a company from the US where the return may be a double in the next 2 years. Less than 2 years. So your return might be 50% a year. And that's great. So if you are interested, you can join my membership. Go to my profile and press join. Now, regarding PayPal, you have to predict the total payment value. How much will they grow? Yes, they currently have 446 million users. The most important market is the US, and also something in Europe and other countries. And to increase this total payment volume, for sure, it will increase more because we have inflation. So inflation, that will be a positive driver for the total payment volume. And then what's next? They also have to attract more users to their platform. And how are they going to do that? This you have to figure out. Because there is a difference between only 6% growth rate, the total payment volume, and 16%. And also the total take rate. If you look at the total rate over the last 5 years, you see a decrease, quite a decrease, from more than 2% to 1.7%. And if this continues this way, that will be bad. And I'm sure that the total take rate will decrease more in the future. So they really need to expand their market share to maintain this growth rate over 10%. And of course, if they can deliver 10% in revenue and free cash flow growth rate, then the valuation changes. You can have easily a double from this level, 2x. The market cap to go over 140 billion. But of course, be aware of the growth rate, if they can maintain it over a longer period. At least to maintain it for 1 year, you make a double and then you can sell the stock. And that's it. You move to another investment. But over the long term, 5-10 years, and for sure the total take rate will decrease over the next 10 years. And the total payment volume, here you have to be careful. It will increase, but if they face competition from other players, new entrants, for instance, X Money from Elon Musk, then they might lose market share and the growth rate may be flat. So you have to be very careful with this company. Take advantage of it when you have a margin of safety. So in this way, you don't have to worry about this difference in the growth rate between 6 and 16% or 0 to 10%. Take advantage of the right time, and that's the moment when you can have a 2x over the next 2 to 5 years. That's the aim. So if you have other questions, please let me know in the comments.